Want to become a millionaire by investing smartly? What if I told you that with just 100 per week, you could build a portfolio worth over $1 million? In this video, I'll show you how to use ETFs to grow your wealth over time without taking unnecessary risks. We'll break down why ETFs are a game changer, how much you need to invest, and the best strategies to maximize your returns. If you're serious about making money and securing your financial future, make sure to watch until the end. So, why should you invest in ETFs instead of individual stocks? Well, ETFs, or exchange-traded funds, allow you to invest in a basket of stocks rather than picking individual ones. This means lower risk, automatic diversification, and lower fees. Take the S&P 500 ETF, for example. It tracks the top 500 companies in the US, including giants like Apple, Microsoft, and Amazon. Over the last few decades, it has delivered an average return of about 10% per year. Even legendary investor Warren Buffett recommends ETFs over stock picking. In fact, he once said that for most investors, putting money in a low-cost S&P 500 ETF is the smartest move they can make. So how much should you invest? Let's talk numbers. How much do you actually need to invest to reach $1 million? Let's say you invest $100 per week in an ETF that gives you a 10% annual return. Thanks to the power of compound interest, here's what happens. After 10 years, you'll have about $83,000. After 20 years, your portfolio grows to $300,000. After 30 years, it reaches $900,000. And in 40 years, you'll have over $1.3 million. The key? Consistency and time. Even small amounts grow into massive wealth if you stay invested long enough. That's why the best time to start is today. If you're in Canada, you have two amazing investment accounts that can help you grow your money tax efficiently: the TFSA and the RRSP. TFSA, Tax-Free Savings Account. All your gains are completely tax-free, which makes it the best option for long-term investing. You can withdraw money anytime without penalties. RRSP, Registered Retirement Savings Plan. You get a tax deduction when you contribute, meaning you pay less tax now. However, withdrawals are taxed later in retirement. If your goal is to retire early or have more flexibility, prioritize your TFSA first. If you want tax savings today and are thinking long-term, RRSP is a great option too. Ideally, use both to maximize your wealth. Now, let's talk about the biggest mistakes that stop people from getting rich through investing. Mistake number 1, trying to time the market. Most people panic when stocks go down and sell at the worst time. Instead, use a dollar-cost averaging strategy. Invest the same amount consistently, no matter what happens. Mistake number 2, picking individual stocks instead of ETFs. Yes, some stocks can skyrocket, but most don't. ETFs give you diversification and protect you from picking the wrong stocks. Mistake number 3, selling too early. Building wealth takes time. The stock market rewards those who stay invested for the long run. Don't let short-term fear ruin your long-term success. So now you know the power of ETFs and how they can make you a millionaire over time. The question is, will you take action? The best investors don't wait for the perfect moment to start. They start now and stay consistent. If you found this video helpful, make sure to like, subscribe, and turn on notifications for more investing tips. Drop a comment below and let me know, are you investing in ETFs yet? If not, what's stopping you? Thanks for watching, and I'll see you in the next video.